So hello friends, welcome to another video. In this video, we are going to talk about the multiple time frame analysis or top-down analysis, whatever you call that. Now, first of all, we should know what is a multiple time frame analysis. Friends, in this, we use more than one time frame, and that is why we call it multiple time frame analysis. But the question comes, as we have many majorly used time frames like monthly, weekly, daily, 8 hour, 4 hour, 1 hour, 30 minutes, 15, 5 minutes. So how many time frames we should use to analyze the market? Now the answer to this question is very simple, which is two. Yes, you need only two time frames to analyze the market and find trading opportunity. So what are these two time frames? First time frame is your entry time frame, where you actually take an entry on a trade, and the second time frame is a higher time frame with respect to your trading time frame, where you find the direction of the market, mark your zones, and analyze the market. So now the question comes, okay, I have a entry time frame, so how to find a higher time frame with respect to your entry time frame? If I'm trading on the 5 minute, then what time frame should I use my higher time frame? Should I use 15 minute, 1 hour, 4 hour, daily, or what? Or I should use more than one? As I already explained earlier, we are going to use only two time frame, so there will be one higher time frame for our trading time frame. So now I'm going to tell you how to find a higher time frame for your entry time frame. As you can see on the top left corner of this video, we have few time frames. So if you pick any of the time frame as your entry time frame, like 5 minutes, then one time frame right to that is going to be your higher time frame. So if I'm using 5 minutes as my entry time frame, 15 minutes is going to be my higher time frame. If I use 15 minutes as entry time frame, then 1 hour is going to be my higher time frame, and accordingly you can find your higher time frame. Now there is a second method as well. In that method, we are going to use a multiplication factor of 3 to 6, means a higher time frame should be 3 to 6 times bigger than your entry time frame. Now let's validate what we learned. So suppose we have a 5 minute as our entry time frame and 15 minutes as our higher time frame. Now 5 minutes is having 5 minutes. In 15 minutes, how many minutes we have? 15. So 5 minutes multiplied by 3, we got 15. So 15 minutes is 3 times bigger than 5 minutes. Same we can do for the 15 minute and 1 hour. 15 minutes is going to be our entry time frame, 1 hour is going to be our high time frame. 15 minutes is having 15 minutes, 1 hour is having 60 minutes. So here you can say we have a multiplication factor of 4, or you can say 1 hour is going to be 4 times bigger than 15 minutes. So this way, guys, you can find a higher time frame for your entry time frame. So let's talk about, friends, how to use the entry time frame and the higher time frame to analyze the market and find good trading opportunities. Now, first of all, what we have to do, guys, let's come to our higher time frame. For me, it's a daily. I do all my analysis on the daily time frame, and I use 4 hour as my entry time frame. So first of all, let's come to our higher time frame and find the direction of the market. As we can see here, price is continuously making lower lows and lower highs, so it's in a downtrend. If we start from the top, we have the low, lower high, lower low, and since then the price is here. So coming to the chart on the higher time frame, find the direction of the market. First step. Next step is mark your zones, mark your support and resistance zones. Now, while marking these two zones, we have to consider 2 points. One is these zones should be recent or immediate, or you can say recently tested. And the other point is these zones should have multiple retests in the past. If we try to find out a resistance for the current price, then we see this zone is a recent resistance zone. And if we check historically, we find that yes, it's retested historically many times. So yes, it's a strong resistance zone. Now let's mark the support zone as well. Price is currently on a support. Yes, I will mark one more support zone and I will tell you why later. Yeah, here. So we have our support zone and we have our resistance zone. So we will color these zones. This is a resistance zone, so we are going to color it red. And support zones, we are going to color them green. So friends, if you want to know more in detail how to identify these zones on the chart and how to draw them, then I have already prepared one video on this topic, and link to the video is given in the description box. So you go and watch this video. So friends, we came to the higher time frame. We find the direction of the market, which is downtrend in this case, and we mark our zones, resistance zone and the support zone. Now we are waiting for the price to hit either resistance zone or the support zone. Once the price hit any of the zone, we will go to our smaller time frame, our entry time frame, and look for a trading opportunity. Now in this case, if the price hit the resistance first, now we are already in a downtrend, so we have more probability of price hitting this zone and get rejected to continue the downtrend. So once the price hit this resistance zone, we will go to our smaller time frame, which is entry time frame, and look for a shorting opportunity in this zone. If the price break this zone and continue and hit this lower support zone, then we can go to a smaller time frame and look for a bullish trade opportunity. Why? Although we are in a downtrend, but once the price hit this strong support zone, we are expecting some kind of pullback or maybe complete pullback to this zone to continue the downtrend. Now on a higher time frame, as we are expecting some kind of pullback, so on lower time frame, this small pullback is going to be more than enough to complete your target. So this is the process, guys. We are coming to the higher time frame, find the direction of the market, mark your zone, and then wait for the price to hit any of the zone support or resistance. Accordingly, once the price enter the zone, go to your lower time frame and look for a trading opportunity. Particularly for myself, I use candlestick patterns like uh, hammer candle, engulfing candle, or morning and evening star. Or I also use the chart pattern as double bottom, double top, or the head and shoulder and the inverted head and shoulder as the entry trigger while I'm taking trades on the lower time frame. That is how you can use the two time frames to complete your multiple time frame analysis and find very good opportunity in the market. So I hope you enjoyed the video, and if you really did, like the video, share the video, and subscribe to the channel in order to support the channel and YouTube algorithm. Thank you very much, guys. See you in another video.